All right. Good morning, everyone. Thank you so much for taking the time to be with me. My name is Linda Squires with American Ag Credit, and I am a senior insurance consultant for American Ag Credit, and meaning I have lots of years of experience in crop insurance. I am housed out of the Turlock office, but I also work out at Stockton, Oakdale, Merced, and Salinas as well. So I love traveling over the state, seeing the country and meeting with growers. So that's a very fun part of my job. I'm just going to share a little bit about crop insurance today, talk about the importance of risk management. We have several different programs that can help manage your risk, and then also go over a few important deadlines which are coming up on us very quickly. Why is risk management so important? Well, I'm sure you would all agree that farmers need to protect their capital. Farmers need to protect their savings. And there is such an unpredictability of Mother Nature. You can do everything right, to the day, to the hour, do everything right to, produce and harvest your crop, but Mother Nature can come in with some unexpected storm, a freeze, a hail, something like that. And then, the income from your crop is severely affected. So crop insurance is a very good tool to manage the unpredictability of Mother Nature. It also helps with loan security. Crop insurance was designed that, if there is a weather event, it will help you meet your expenses and get you through to the next year. Okay, nobody's going to make money on insurance. Nobody ever does, but it's there when something unexpected happens. You can pay your bills, pay your loans. Your lender appreciates that, of course, and then get you through to the next year. Why crop insurance? Well, crop insurance is a program underwritten by the federal government. RMA, the Risk Management Agency, is the division under USDA. They set all the prices, the rates, the rules, the regulations. And so that is why, unlike auto or home insurance, where you can shop around and get a better deal or a better quote, it's all the same cost regardless what agency or what agent you're dealing with. It is a government program because there is no one insurance company that would take on Mother Nature, so to speak, on its own. So it's a government program that is reinsured in many different ways to make sure that if there is a weather event, that growers do get paid. It truly is the best risk management product available. The reason for that is that the government will subsidize the premium, which is wonderful. So the farmer is not having to pay the full amount. And there's no premium due at the time of sign up. It's the one insurance that you can sign up now and pay for later. So if you were to sign up in January for the 2022 crop, you would not be billed until August of this year. And then you actually have till January 31st of 2023 to pay it in full. So there's a lot of flexibility when it comes to paying the premium. And as we know, cash flow can be a little bit challenging in the fall and at harvest time. So it's good to have flexibility and options. Also, contract pricing is available. We can increase the price per ton on the crop insurance policy to match what you're getting from the winery. Insurance qualifications, the vines must be coming into the fourth growing season. So in order to be insured for 2022, they need to be planted in 2019 or earlier. We also can insure grafted vines, the third leaf after they are grafted. They must have a minimum average yield of 2 tons per acre. But I know with everything that's been going on in these past years, sometimes that doesn't always happen. We can ask the federal underwriter to waive that requirement, and in most cases, they do. I like the Grape policy because it's so incredibly flexible. because growers can insure all grape varieties, or they can pick and choose which varieties they want to insure. So that is a big thing. That's not an option in other crop programs. So if they want to insure all of their Zinfandel, all of their Pinot Noir, they need to insure all of those acres within the county, which they receive a share of the crop. But they can, like I said before, pick and choose which varieties they want to insure. They can also insure different varieties at different coverage levels. So again, more flexibility. When vineyards are leased on a crop share, we can insure the tenant share. We can also insure the landlord share, or we can put both of them on one policy. So again, flexibility when it comes to crop shares, if we need to do that. Covered causes of loss, any adverse weather. So we call it MPCI, multi-peril crop insurance, because it does insure against multiple perils. Any adverse weather, frost, wind, drought, excessive heat, excessive rain, any adverse weather that occurs while the crop is in the vineyard. Once the crop is harvested and removed, then the insurance is done. But we also cover poor quality. So if there's a weather event and their quality is downgraded, there are adjustments within the policy when we're adjusting that claim. We insure for bird and wildlife damage. We also insure for diseases and pests, as long as they're following the recommendations of their PCA. And then we also insure for smoke taint. That has been an issue over these last 5 years. And so a grower needs to have a test done by a certified lab. But if we do get to that point, the agent and the loss adjuster are in constant communication with the growers to let them know this is needed and this is the next step, and we walk with them through that. The way the program is set up, it's on a production guarantee. So when we're looking at insuring a vineyard, we look at the previous production history up to 10 years, and then we come up with an average of tons per acre for that variety and that vineyard. So once we get that average tons produced per acre, the grower can be insured up to 85% of that average. And that is what the grower chooses, whatever coverage level best fits them, their operation, and their budget. And that's something that us agents, we sit down and show all of the options so you can pick what coverage is best for you and your operation. Now, with young vineyards, of course, we don't have a production history. So there are formulas that we use, to come up with an average yield per acre. So we can use county averages. In some cases, we can ask the federal underwriter for a determined yield request, meaning asking for a higher average. So there's lots of different things that we can do when there is a young orchard, a young vineyard. Forgive me. Okay, the total coverage is by unit. We don't go on an acre by acre basis. So it's for that block, that variety that is there within that vineyard. We take the per acre guarantee, we multiply it by the number of acres in the unit, and then we have the coverage. Price per ton, the prices are established by RMA, and they do establish prices by variety and also by crush district. So, and this is the price that the grower is paid per ton for each ton of loss below the unit guarantee. So when we have that guaranteed amount, that guaranteed figure, any production below that, we take those amount of tons and multiply it by the price that they're insured at, and that calculates the claim payment. So it's a very straightforward process. There's no hidden formulas, nothing It's just a very straightforward process. Now, the price that RMA sets up can be increased to match the contract that the grower has with their winery. So the maximum that is allowed is double the established price, and the established price is the price that RMA sets. So again, those are options that when we're sitting down with the grower, talking about coverage, talking about levels, we're also talking about price. And it's not required that a grower insure at the contract price, so we can do a price in between. So again, lots of flexibility, because we want to structure the coverage that fits the grower and their budget and what they need the best way. We understand that it takes wineries sometimes a little longer to put contracts in place, so we actually have until May 15th of this year in order to get all the contracts in place and adjust the coverage. Here's an example of several different varieties for Crush District 7. Again, these are the prices that were set by RMA, and again, we can increase them if the farmer wants. It's an option that they have. And so this is just the established price per ton. RMA does review each variety on an annual basis. So these prices will change a little bit from year to year. So they're not always, they're just locked in for the crop year, one crop year at a time. The second program that we have that is a nice option for some growers to look at, whole farm revenue protection. And this is a new policy that's been around about 7 years now. And it's a revenue safety net for all of the commodities grown under one farming entity. And so it provides coverage for crops that do not have MPCI coverage available. Specialty crops like lettuce, broccoli, pomegranates, asparagus, melons, anything like that, there's not an MPCI policy available, but we can cover them under this whole farm revenue protection. So it's a good policy that it kind of acts like an umbrella. So if you think about your auto insurance, your home insurance, your farm insurance, and then you have an umbrella policy over that, it kind of acts the same way. So any crop that is grown on the farming entity is automatically insured. So they can purchase it in addition to the MPCI coverage or instead of. Excuse me. Okay, so the way we come up with the whole farm approved average is by looking at the 5 years of recent tax returns. Okay, we go off of the crop income from the Schedule F. Excuse me. So, and that's where we determine an average of crop income for the past 5 years. And then we also use the 2022 farm plan, what they're intending to do. So those are the figures that we're using when we're putting together a quote to sit down with a grower and see if the whole farm protection would be a fit for them or not. There is a little bit of a delay when finalizing claims because we have to wait until the taxes have been filed for that tax year in order to finalize any claims. So it's kind of, the timing is a little different than the MPCI, but it is a good option that gives good coverage if it's something that fits their operation. We also have named Peril products specifically for grapes. We have a grape cluster freeze insurance. So again, growers can choose which varieties to insure. They can choose how much dollar coverage they want per acre, up to a maximum of 1,000 per acre. Coverage kicks in when the temperature falls below 32 degrees for an extended period of time. And this is a policy that is offered directly with the insurance company, meaning it's a private product, it's not underwritten by the federal government, and there's no premium subsidy. Premiums are due at the time of application. So I have not sold many Grape cluster freeze insurance policies because freeze is included under the multi-peril, the MPCI policy. So, but depending on what location your vineyard is in, you know, if you're in an area that is more prone to freeze, you can purchase this coverage in addition to the MPCI and have a little bit more coverage in case you're in an area that is prone to freeze. So another option. I think growers need to have options to help with their farming operations. Choosing the right policy, okay? That is my job, to show you all of your options, to sit down and evaluate what would be the best coverage for you that would fit into your budget, that would help you to meet your expenses and get you through to the next year if something unforeseen happens. And I have had many years of experience in crop insurance, and I'm married to a farmer. So yes, we have insured our crops. We've received crop insurance payments as well. So I truly see the value of how crop insurance can help your operation. At American Ag Credit, we truly are ag experts. That's all we deal in. I don't do any other lines of insurance. We focus on agriculture only. And as I said, I've had many years of experience in the crop insurance industry. I started just out of college working with my dad when he started his crop insurance agency. So anyway, I really enjoy what I do. I like working with farmers, and I like showing them how they can use crop insurance to best manage their risk. Here's my contact information. Oh, I think I have one more. I know the important deadlines. With each crop program, there are deadlines. So for the MPCI Grape insurance, you have to sign up by January 31st of this year in order to have coverage for 2022. These are very hard, firm dates established by RMA. And so if I get a call on February 1st, I can't write the policy, unfortunately. So if you already have a crop insurance policy and you're working with another agent, that's certainly fine. I'm happy to be a resource. If you have any questions, feel free to reach out to me. Or if you're not happy with the service you've been receiving, I'm more than happy to talk with you about that as we can transfer policies to American Ag Credit. You can see there the Grape cluster freeze, if you're interested in that, has a deadline February 15th, and then the whole farm insurance as well. For calendar year tax filers, that deadline is February 28th. So just keep those in the back of your mind, and make sure if you want the insurance to, call, see what we can do. We can put some numbers together for you, have a conversation, and see if it's a fit for you. So I think here's my contact information once again. If you have any questions, feel free to reach out to me. It's fine to call me on my mobile or send me an email. I'm happy to help any way I can. So thank you so much for this opportunity to present to you. And I hope that you get crop insurance in place, if not with us, with somebody else, so you can make sure that you can cover yourself in case unpredictable Mother Nature. So thank you so much.
Thank you, Linda. This is Kim Stemler. And Linda, maybe would you be willing to drop the presentation and introduce your lenders so everyone knows who they should be calling?
I would be.
Or lenders, you can introduce yourself if you want.
Mandy, why don't you start us off? That would be great.
Okay, I'm Mandy Kendall. I'm a senior loan officer here in the Salinas branch. There's three of us, Ryan, Scarr, and Spencer Deems will introduce themselves after me, but All of us are available to answer any of your questions, along with Linda's help in anything that you may need crop insurance wise. I have a little bit of experience like Linda does on the personal side from using crop insurance, but she's definitely the expert and is happy to help.
Great. Thank you, Mandy. Ryan, do you want to go?
Sure. Yeah. My name is Ryan Scarr. I'm a Vice President of Lending out of our Salinas branch. Been in lending about 4 years, but grew up in Salinas in the produce industry. So I'm familiar with the area and the crops, especially the grape side. All of us lenders focus mainly on, real estate, property development, lines of credit, things of that nature. And, our other services like crop insurance, we're able to bring in experts like Linda to help us out with all of those. So if you guys have any needs on any type of ag products, we're happy to help, and you can reach any of us to get that done.
Great. Thank you. Spencer?
Spencer Deems. I'm a lender in the Salinas office. I think Ryan and Mandy have pretty much said it all. So if anything comes up, feel free to reach out.
Great. Thank you. So I have a few questions. Gwen, do you have any questions or anyone else?
I had a quick one, Linda. So you had the dates up there. How soon before, or like what would be the latest time somebody could reach out in order to get a policy done before those dates?
Well, we can put something together very quickly. The application needs to be signed by January 31st. So if a grower were to call me on, that afternoon and say, I really want it, this is the coverage level I have, I can send them an application, get a signature via email or DocuSign, and fulfill that requirement. So ideally, maybe a few days before, but we can put it together fairly quickly. I just prefer not waiting till the last minute if possible.
Great, thank you. Any other questions? I have a few. Okay, so I just want to clarify, and I'm pretty sure I know the answer to this, but wine grape crop insurance has to be filed separately and before whole farm insurance, right? Like your wine grapes don't go under your whole farm. Is that accurate?
No, it's not.
Okay, good.
Everything would go under, if you were looking at a whole farm policy, yes. So you could have the MPCI policy for the grapes in place, and then you can put the whole farm policy over that, kind of like the umbrella. And so growers, if they have both, they get a premium credit, or a discount, I should say. The premium rate is much lower if they're insuring on the MPCI side in addition to the whole farm. So, and that's something that I show them. Look, this is your whole farm. This would be your whole farm premium and coverage without the underlying MPCI. And then I also show them, since they have the MPCI, what the premium discount is.
Great.
So yeah, they can do it either or both.
Okay, so for those that are raising more than just wine grapes, farming more than just wine grapes,
Exactly,
they have a little bit
yeah.
more time. Yeah, okay.
Exactly.
And then you talked about the flexibility of the program, and unfortunately we have had a few years where we relied on crop insurance.
Of course.
So when do those decisions get waived? Like one of the things you talked about was the tonnage being waived, 2 tons per acre. If that's not what you're growing, if that's not what you're raising, that could be waived. When does that kind of waiving of requirements happen? Is it when they apply? Because I think a lot of people ran into trouble when they filed claims and they realized, oh, this isn't working. So when does that kind of conversation happen?
It should be happening at the time that we're putting the crop insurance in place,
okay.
Meaning in January. The agent does have time to submit the paperwork asking for a waiver, because sometimes, when we're in January, we put the coverage level in place, but maybe the grower isn't available to go over all the production and get all the the tonnage reports and everything to us. So we can report the production and ask for a waiver of that 2-ton requirement if needed. So sometimes that's a few months later, but it should all be in place before the risk period begins. And so it should be all done in the beginning of the year. I'd say the first 4 months of the year.
Not when the claims are filed. Right.
Exactly. And so that's what, we sit down, we either have a phone conversation, email, or face-to-face conversation with every grower who is insured with us. And, getting all of this stuff set out, because I do not like surprises at claim time. So, once we get everything in place, the grower knows this is what I'm insured for, and we move forward from there. So I'm not one to delay anything. I like to get it set from the very beginning.
Right. And then sort of along that line, I'm imagining that CDFA, which is USDA's crop report, is what they're using. Some prior year crop report is what they're using for the value of each crop, of each varietal. So unfortunately, fortunately, we have some premium AVAs that are just asking or getting much more than what that crop report values the average tonnage as being. So speak more about that, because it really, we have large growers growing in the valley, and then we have premium growers growing in SLH and Arroyo Seco and other places. And there's a huge disparity between the value of those crops.
Of course. No, that makes sense. Well, and, as I spoke earlier, the prices are set based on crush district. So that's the first thing we look at. What crush district are those grapes, located in? And what is the maximum amount that we can insure for? Now, if that maximum amount was way out of line with what the grower is already getting and contracted, then that's something that I would submit for a special review to the federal underwriter. They would have to be the ones to approve it. And so that's the route that I would go. And then once they make their determination, they would send that back to us, and the grower, I would sit down with the grower and say, this is what they have come up with. And this is your option. These are your options for crop year. And then you give the grower the chance to accept the offer or reject it.
That's great. And I'm sure that can be proved with contracts if you just go back,
of course,
several years of contracts showing the crop value. Okay, good. And then one other question, and we spoke a little bit about this, and unfortunately, I don't know enough about it to ask a really good question, but I'm going to pose it anyway. I know with crop insurance, some of our growers have had trouble getting crop insurance because of their ownership structure, because of their investor structure. So as much as you can speak about that without me understanding the issues fully, I would really appreciate that.
Oh, sure, absolutely. Well, and that is something that the agent should be sitting down, exploring the ownership structure, of the LLC or the investment group, and making sure that everything is in place correctly from the beginning. So when there's claims, there's no surprises. We have regulations that we need to follow, that RMA has set up. And so as long as an agent, maybe one thing that I like to see is the operating agreement or articles of incorporation or the LLC articles, and take a look at that and make sure that we're documenting everything we need to. And then you get it set up correctly from the very beginning. And then that way, if there's something that is preventing us from putting the insurance in place, we know that from the beginning. So there shouldn't be any surprises at claim time, but that's a good agent should dive into that and follow the regulations that RMA have put in place for the crop insurance. Does that answer your question?
Yeah, that does. As much as I know about that question. That's all the questions I have. Anybody else have anything else? No? Okay.
I have one question, Linda. For the
Sure.
NPCI program, depending on what, I guess it kind of is probably very dependent on what happens versus if it's, you know, an early freeze and they know that they're going to lose everything for that year, or, you know, deer hit the vineyard early and they know it's going to be a total loss or something like that. What is the payout for the NPCI versus, because I know you had talked about the one where they aren't paid out until they file taxes for that year. What's the turnaround? Is it pretty close after harvest regardless, or is it just kind of dependent?
Generally with the MPCI, it is pretty close after harvest.
Okay.
So once we have all of the harvest numbers and we know what that tonnage is, we compare it to the guarantee to see if there is a claim. And then if it's below the guarantee, of course, then the adjuster takes it from there and does their own claim paperwork. Once the paperwork is signed, it's usually, I'd say 7 to 10 days, I should say 7 to 14 days maybe, before the grower gets their check. So it is fairly timely.
Okay.
With the smoke taint losses we've had with wildfires, that has been delayed due to all the lab tests that were needed. So
Right.
that, you know, and that was just unavoidable because there was so many at one time, of course. But generally, once the harvest is done, then we can adjust the loss and settle the claim. So yes, and that also is an advantage to having an MPCI policy when you have a whole farm policy also, because you can harvest, you can get your claim payment with the MPCI side, and then you do have that delay because you have to file your taxes and do all that. So I generally encourage growers to have both policies, because you don't want to have a crop insurance claim that you're waiting 6 months for. That's just no fun for anybody. But the MPCI turnaround is very, usually very quickly once all the paperwork is done. In addition, if a grower, say, were to get a freeze and totally lost his crop, if there was going to be no harvest, the adjuster could go out at that time and settle it.
Okay.
So if there was a freeze and say it was kind of marginal, the grower wasn't sure whether he wanted to harvest or not, we would just let the crop develop. But the insurance will never tell the grower what to do. Okay. So I like that the grower is always in charge. You know, the insurance would say, okay, this is what we come up with if we do an appraisal. The grower thinks, you know, well, I think I'll harvest more tons than that. So the grower is always in control, and the insurance is never telling them or dictating what they need to do. So I very much like that also.
Perfect. Thank you.
Great.
You bet.
And I had another one too. So, you know, there was the slide you had up there about Crush District 7 and kind of the pricing there per varietal. If someone is growing over a larger geographic area, say in different parts of the state or, you know, different counties or wherever where those prices may be different, would they get separate policies, or is there a way to kind of blend it together to where it kind of averages the two? How would that work?
We would separate it out by counties. So, which would separate the crush districts, I think, for the most part. And because the premium rates are different by county, usually not a lot, but they'll differ. So we'll set it up on a county by county basis. Depending on how big the operation is, we could put more than one county on one policy, or if it might just be easier to totally separate them. It just depends how complex everything is. I kind of like to separate them just because to me, usually, okay, this is this and this is this, and it's a little easier. But yeah, we go on a county by county basis. So it would separate out that way.
Other questions? No? Linda, you've been wonderful. Thank you so much for this. I'm going to stop the recording right now. Okay.
Okay.